Okay, so in this module, we're going to be talking about the exits of the trend surfing strategy. Now, as I said on the whiteboard, there are a number of different ways you can exit any strategy, but the one I'm going to talk to you today about will allow you to keep in the game for as long as the trend wants to continue. Let you surf that trend indeed as far as it wants to take us. So let's get onto the screens now and I'll show you exactly what we'll be looking for. Okay, so here we are on the daily. In the bottom right, no trend developing there at the moment, so I'm just going to go continue to scroll through on the daily until they start fanning out in either direction, and indeed they could look as though they are fanning out there, so just a quick check. Indeed they're fanning out nicely, all pointing south, so the daily has been checked off. So back up now to the 4 hour, not fanning out really at the moment, they're still heading up, so I'm going to scroll through now on the 4 hour. Remember, the daily's been checked off until we trade above or close above the 60 moving average. Nothing showing there at the moment. And indeed, now trend is looking up on the 4 hour. Just scrolling all through. And looks as though they're fanned out now on the 4 hour. So the 4 hour has now been checked off. So whilst they remain good, we drill back down to the 1 hour looking for our entry. And we're looking for an entry back into the 21 EMA. Okay, there's a touch of the 21 EMA. We will now be placing our sell stop below the recent swing high minus an ATR, which will put it in down about here. And our stop loss will be up at around there. So we placed our pending sell stop order and our stop loss order as well. We'll now see how this plays out. Okay, market trades down and now finally takes out our sell stop. So we are now in this trade. And we need to move our stop loss level back down to trail behind the 60 moving average by one of the 14 ATRs. So once we have our stop and order in place, we've established the risk. We now need to move our first profit target to risk times 1, so 1-to-1 risk reward. It's about $15. So our first profit target will be down here at 15.72. So we'll scroll on through now. Now remember, as the market moves in our direction, we have to trail our stop down. This will be done automatically with the expert advisor. Okay, so now we're moving down towards our profit target. We can move our stop down a bit in line with an ATR, in line with 14 ATRs behind the 60 moving average. Like there. And indeed, we've hit TP1. We've hit TP1 at $15, where we exit half the trade. We are now looking for TP2 at 2 times risk, which will be another $15 below. So that comes in at about here. Now, once we've hit take profit target 1, we move our stop to break even. So for the second half of the trade, worst case scenario, we'll be out at break even. We're now in a risk-free trade, if you like. So the intention is to hit take profit target 2, but if it does have a pullback and it closes above the 21 moving average, then we'll exit that second half of the trade. But clearly the intention is to hit to TP2. But as it does drift down or trade down, of course the 21 moving average will come down as well, so we may be locking in more profits than just break even. Okay, and indeed we'll just see how this pans out. Okay, in fact we hit to take profit target 2 just a couple of candles later, so we're now out of the second half of that trade, well 50% of the second half of that trade. So TP2 has been hit, TP1 has been hit, we're now looking for TP3, and as per the rules we're going to trail this behind the 21 EMA, so we're now just waiting for a close above the 21 EMA, and indeed we'll see exactly how it pans out. So market's trading down, you'll see the 21 moving average down as well, moving down with it. Okay, so we're better than break even, and moving back down, and indeed didn't quite close above, but it did there. So we're now out of the third part of the trade, TP3, at this level, which will be down there. And we just have now the remaining fourth part of the trade, which we will close when the price closes above the 60 moving average. Remember, this is just a small part of the trade. It's actually just an eighth of the trade. We'll just keep in this trade as long as the trade wants to give us the trend. And indeed, it closes above there. So the final part of the trade, TP4, was stopped out above the close of the 60 moving average plus the ATR. And of course, that's still a profitable close. So there you see, we've exited the trade in 4 parts. Worked out quite well, that one. Okay, so we can see we're nicely fanned out here on the daily. Been fanned out for a few days now, and the 4 hours also been fanned out as well. So we're looking for entries now on the 1 hour chart. So we're just going to scroll through, waiting for the moving averages to fan out. Indeed, they're fanning out now. So we're now going to wait for a pullback into the 21 moving average. Okay, now there's a pullback, and we don't close below the 60, so the trade setup is still valid. We're going to place a pending buy stop, 1480 Rs above the recent swing height, which will come in about there. And then we place our sell stop, 1480 Rs below the 60 moving average, which will come in about there. And now we'll scroll through to see if this trade got triggered. And indeed it does. Gets triggered on that candle there, takes out our buy stop. We go long the trade. It also looks as though we've had a profit target hit on the same candle as well. Profit targets will be the same time as risk. You can see here the risk was approximately $15. So $15 from there would put in our profit target in up at 305. So our profit target would have been hit as well there. So therefore we exit half the trade and move the remainder of the trade stop to break even, which is in there. Now we set our take profit target 2, which will be $15 higher again. That's going to be up there. And we'll see indeed if TP2 gets hit. Now, if TP2 gets hit, then we'll be exiting half the trade again. But as price moves up towards TP2, of course, the 21 moving average will move up as well. So we'll trail our stop below the 21 moving average, just in case we have a pullback. We still can lock in some more profits better than break even. Let's indeed see what happened. Okay, almost up to TP2 and comes back down. So it doesn't quite get to TP2, but we've trailed our stop 1480 Rs below the 21 moving average, which would mean we would have got stopped out on the second half of the trade. Better than break even, still a nice profitable trade. So we exited in 2 parts on that trade. First of all, TP1 and second TP2 as we came back down through the 21 EMA. Okay, so here we are now on the daily chart, looking for the moving averages to be fanned out, and indeed they are, all pointing up. So that means that the daily has been checked off, looking for buy trades only. Drilling down now to the 4-hour chart, not quite fanned out here, as you can see, all bunched up. So let's just scroll on through until they start to fan out. And indeed, there they are, fanning out nicely in the 4-hour. So the 4-hour is now checked off. Drilling back down now to the 1-hour time period, and we're going to be looking for a pullback into the 21 moving average. And there's your pullback. Okay, we haven't closed below the 60, so the trade is valid. So we place a pending buy stop order and 1480 Rs above the recent swing high, which comes into about there. Okay, and at the same time we place a stop order 1480 Rs below the 60 moving average, which will be about there. And we'll scroll on and see how this plans out. Okay, so we've now gone long we've entered a long trade. Our buy stop has been triggered at this point here, and we make sure our stop is an ATR below the 60. So we move our stop order up to about there, and that will give us a risk of about 95 pips. So our first profit target will be also 95 pips above, which will be about there. That will be the 1-to-1 risk-reward ratio, where we will exit half the trade should indeed it get there. We'll just scroll on through and see how this works out. Almost touched there, not quite. Almost touched there again. And finally, TP1 has been hit. So we now move our stop to break even. We've exited half the trade, and the other half of the trade is now at break even. We'll now set TP2 at 2-to-1 risk-reward ratio. We'll also be trailing the stop 14 ATRs below the 21 moving average for the second tranche, so hopefully get better than break even. So as price moves up, we trail our stop just in case TP2 does not get hit. Now this is going to be done automatically on the Expert Advisor for you as well. So trailing our stop up as price moves up, and indeed price moves back down and closes below the 21 moving average, where we exit the second half of the trade. So in this example, we just exited in two parts. TP1 and TP2 was the trail behind the 21 moving average. Okay, so here's another example. This time we've got the faster moving averages below the slower moving averages, nicely fanned out on the daily. That's a check. The 4 hour, exactly the same, nicely fanning out, pointing down. We're looking for sell trades only. Now back to the 1 hour time period, looking for a pullback into the 21 EMA, and we just scroll through, indeed waiting for that. And on that candle there, it touches the 21 EMA. So we're now going to place a pending sell stop, and we'll place that 14 ATRs below the recent swing low, which is going to be down about here. And our sell stop will be 14 ATRs above the 60 moving average, which will be about here. And we'll scroll on through and to see how this one plays out. Okay, so we are in the trade. We've hit our pending sell stop. We are now short. We move our stop loss down to 14 ATRs above the local, above the 60 moving average, which is about there. And we put in our first profit target, which will be 1-to-1 risk reward ratio, which will be about here. Okay, roughly drawn, of course, but you get the idea. This is your risk. That's your first take profit. And let's scroll on through. Okay, first take profit target has been hit. So we move the stop to break even and then put in take profit target 2, which will be down at 2-to-1 risk reward ratio, down about here. And of course, as prices move down, we'll be trailing our stop behind the 21 moving average plus an ATR. So price has moved down, so in fact our stop will now be down here as well. And keep moving down. So moving our stop down as we go. Now you do this every candle, of course. Once it's automated, it will be done for you. And we pull back and hit our trading stop, which is trailing behind the 21. So we're out at two parts. First exit was 50% of the trade at 1-to-1 risk reward ratio. Second tranche was at 2-to-1 risk reward ratio, or trail behind the 21. if TP2 had been hit at 2-to-1 risk reward ratio, we'd have moved on to TP3, which would be a trail behind the 21 moving average.